Unlike anything else on radio today, it's a front row seat for great information with today's leading experts. The Millionaire Maker, Hillary Kramer.
Anyway, glad you're here, and always glad to have Hillary Kramer here on Monday, on our Money Mondays. Hillary, it's great to have you. You know that Mondays have been a little bit of a trial for some people over the last few weeks, although, you know, the Dow 24 points up today, the S&P about 3 points up. Not terrible for an opening Monday for the week, is it?
This was great to me, especially because we had follow-through from Friday and follow-through from the day before that. So we're going in the right direction. Some of it, as we say, is short covering. People who were betting against the market, people who are investors who were betting, you know, on cataclysmic disaster, and then suddenly it turned out the Federal Reserve may stop raising rates, right, which means it's easier to borrow, and the whole market, you know, loves that, and the value of stocks go up when rates drop, and the market just took off because the people that sold stock that thought they would buy it back at a lower price. You sell first, you buy back later. They had to jump in and buy back really quickly to cover their potential losses. And that's what brings the market, like those like whipsaw, massive gains, you know, where you see the market on a Friday, you know, up 2.7% across the board on the NASDAQ, S&P. I know that might sound a little bit technical, but it's important to understand that it's not that everybody's buying because they're excited. It's that everybody thought the world was coming to an end and bet that way, and now they got caught with their pants down.
Yeah.
They have shorts on.
Here's the thing. Earnings season has been kind of so far, right?
That's right.
Not terrible,
that's
but not
right.
great. It's just kind of just sitting there.
Exactly. The banks played their game where they had taken all of these reserves for potential losses, and then they add back when they don't have as bad as losses as they expected. American Express had more chargebacks than expected. But the big news, everyone listen up. This is the big news. We have the tech companies' earnings coming out this week. Like, we're all laser focused on it, literally. Okay, so you have Alphabet, which used to be Google, and Microsoft. That's Tuesday after the close. We have Meta, which used to be Facebook. That's Wednesday. And then Amazon and Apple are Thursday after the close and this is the third quarter earnings, the earnings that were made between July 1st and September 30th. This is going to move the market in a big way because you have a lot of people making a lot of bets. You have a lot of big, fast money that are probably waiting for earnings to decide whether they're going to be selling off their Facebook, selling off their Google. It's really, Facebook is a total and complete disaster. It really is. And this whole focus on this Meta. So, yes, your question was really how has it been so far? And my answer is, yeah, you're right. It's been meh. Okay. But, and then we'll also see, we have Coca-Cola and General Motors. They're out tomorrow, Tuesday. And then, who else do we have? Oh, Texas, actually, they're out before the bell. So watch for General Motors, General Electric, Coke, UPS. And then after the bell, we're going to have Chipotle and Texas Instruments. And I always find Chipotle a great proxy for how things are doing in terms of kind of like the fast food world. I really like looking at Chipotle. At first it was, too new, right? And so it was just all very exciting, and every quarter was new excitement and growth. But and Chipotle is still so popular, and that's why I really like looking at it, because it's maybe how you could have looked at McDonald's 20 years ago or 30 years ago when they reported earnings. So let's see what Chipotle has to say. But again, the big deals here, and I even think Apple. Kevin, what do you think? Don't you think Apple? It's really important what they have to say about the let me see, the 14 and how the 14 has been doing, the iPhone. And,
well, if it's what it appears to be, it appears that the 14 has done quite well out of the gate. I don't have any science on that, but it appears to be that typical iPhone fans have found it to be something that they've appreciated. I have not upgraded to one. I'm still on whatever I have, 11 or 12. I forget, but It's everyone that I know that has one seems to really, really like it. Can I ask you a question about a name that you dropped, though, just a second ago?
Sure.
Texas Instruments. Now, I have not heard them mentioned seriously in a business or stock discussion the whole time you and I have been doing this show together. And I remember them from like in high school when they used to make, calculators for your pockets. But are they still in business? What do they do?
They do calculators. They still do the fancy calculators, and that's like they're still in that arena. They also have semiconductors. Okay, so what's in the calculator is a semiconductor, so it can go into computation. So basically that's what they do. But it is interesting that you bring that up. Let me show you. Revenue was $18.3 billion. So sales were $18.3 billion in 2021. And revenue by market selling those semiconductors, meaning the brains, meaning that little tiny little wafery thing that actually does all the work, that's the smart work in any kind of piece of electronics that one uses, is really across the board. Automotive 21%, communications equipment 6%, enterprise 6%, so. Although with industrial being 41% of their business, but they're also spread out nicely, in terms of sales across the world.